Did Peter Dutton engage in insider trading? That's the question that everyone's asking in the wake of Labour's smear campaign against Peter Dutton. And it is one that we should probably look into, because if a politician is engaging in insider trading, that obviously would be rather a little bit disqualifying. However, we also shouldn't be smearing people unfairly, and it's worth digging into exactly what the allegations are so we can make up our own minds. And to my mind, we don't have enough evidence at the moment to conclude Peter Dutton did engage in insider trading, but it would be useful if he more comprehensively answered some of the allegations that are being put forth. So what exactly are the allegations? Well, the allegations date back all the way to 2009, during the global financial crisis. During this time period, financial institutions were taking a little bit of a hammering with their stock price. Myriad banks had seen the stock prices fall precipitously, and on the 23rd of January 2009, several of them suffered then significant lows, at least lows that were not seen for quite some time thereafter. Now, those banks include things like Commonwealth Bank, ANZ, National Australia Bank, and the like. Now, the concern that arose is if, for example, someone were to buy shares at that all-time low, and then there were a policy to come in that caused the stock prices to go back up, then that person would have earned a windfall profit. In this case in particular, on the 23rd of January, the banks hit a low. However, then on the 24th of January, the government floated a bailout type package. Now, ultimately, Australia's banks didn't need a bailout to the nature of the United States banks, but nevertheless, there were announcements after the 23rd. Now, here is where Peter Dutton fits in. Also on the 23rd, Peter Dutton made declarations that he'd bought shares in those banks. And he specifically said that he'd gone and obtained shares in National Australia Bank, Commonwealth Bank, and Westpac. And he made those declarations on the 23rd of January. He'd also previously made some declarations on the 11th of December 2008, 18th of December 2008, 15th of January 2009, that type of thing. But the one that we're really focusing on here is the 23rd of January. And I'll remind you that that would have just preceded the announcement by the government of those bailout type packages. Now, Peter Dutton at the time was not in government. He was in opposition. However, there are still concerns that being in the opposition, he was privy to information about what the government was going to do. And has been asserted that it was common knowledge the government was going to do a bailout type announcement. So circling back to Peter Dutton and the 23rd of January. Well, like I've indicated, he had made this declaration on the 23rd of January. However, this is where another wrinkle arises. Because those declarations can be made up to 30 days after the purchase of the shares. What that means is that Peter Dutton, in theory, could have purchased those shares all the way back in December, but then declared it on the 23rd of January. Meaning there was not a relevant conflict and there was not relevant inside information. Rather, he just lodged it on the 23rd when those stocks had gone down in price. And that suggests that we don't really have enough information to know whether he was trading on material non-public information. Now, to see why that is relevant here, we need to look at the Corporations Act. Under the Corporations Act, in short, insider trading arises where someone trades with knowledge of material non-public information. Now, the aspects of this are materiality and the fact that the information was non-public. Now, in this case, the bailout information was certainly material. After all, it seemingly caused the stock prices to go up. It was also seemingly non-public, in that while there was a non-trivial number of people who knew this information, it certainly was not in the public domain in the relevant sense. There was absolutely a market impact. However, as I've gone back to here, it's not clear that Peter Dutton traded just before that announcement. Rather, he made the lodgement before the announcement. That is, we cannot conclude that he traded with knowledge there was going to be an announcement on the very next day, because it isn't even clear that he made the trade on the 23rd of January so much as made the declaration then. Now, of course, it is possible that he did make that trade on the 23rd of January, and it is theoretically possible he knew about bailout information, and therefore he would have been, if that were the case, trading on material non-public information. However, the facts as in the public domain simply do not reveal that. And if we look at the declaration that Peter Dutton made, well, it specifically is dated the 23rd of January, but it does not say he traded on the 23rd of January. And to my mind, if he's making the declaration there, it, in all likelihood, would have occurred at least one day before the declaration was filed if we think about turnarounds. The turnaround was unlikely to be on the very same day, but still one could engage in insider trading on the 22nd of January if you knew there was going to be an imminent announcement about a bailout. But here, again, we simply don't have that granularity of information. Now that means that the quote-unquote smear campaign that has been leveled against Peter Dutton isn't totally made out. At the moment, we cannot conclude that Peter Dutton engaged in insider trading or committed anything illegal. Now, of course, Peter Dutton might be well served by trawling through his trading history, and if it turned out that his trades occurred, I don't know, in early January or in December, then he could simply say, well, I traded at this point and I made the declaration on the 23rd, therefore the allegations against me simply don't stack up. Now, I don't know exactly when he traded, and maybe those records are difficult to find. After all, maybe he traded them with one trading account back in 2009, and that is more than a decade ago, so it could easily be that it's slightly difficult to dig up that information, but still it could be useful for him to try to do so. At least assuming that the information exonerates him in some way. Now this of course circles back to a broader question about politicians investing and trading. Now I personally have no problem whatsoever with politicians investing. There is clearly an issue with insider trading that needs to be rectified. But of course, that type of thing is rectified all the time in banks and financial institutions. It's not something that we have no experience with. Bankers all the time have to deal with embargo periods and the like, or stocks that are embargoed and similar things. Furthermore, if we really think there's a problem, well then they can invest in managed funds, and I dare say that many of them might actually do better than their own trading if they were to do so. After all, it's not entirely clear exactly how much money, if any, Peter Dutton actually made from these trades. I'll also further note that we should have politicians with investment experience because it enables them to actually analyze companies, to know what is driving companies to go up and down in stock price and what is enabling those companies to do well or to do badly. Similarly with investing in property. The politicians investing is actually a defense against politicians expropriating our assets. So let me explain this. So say for example you're a politician. You know that if your policies are to rob Peter to pay Paul, you can always count on the vote of Paul. This, of course, is a major concern, because then you can have politicians who are going around saying, well, vote for me and I'll take money from this person to give it to you. But if the politicians themselves suffer from doing this, then the politicians won't do so. This is why it's good to have politicians who have investments in property, or have investments in shares, or various other things, because it serves as a deterrent against having those shallow, expropriating type policies. The policies that really just smack of tall poppy syndrome and smack of stealing assets from someone who has been successful and amassed them. This is why politicians investing is actually incredibly useful from a policy standpoint. And therefore, any calls to have politicians divest all of their investments, to sell off their shares or to sell off their investment properties, I think ring hollow and I think are actually incredibly bad policy. Because if the politicians themselves have no investments, then they're not going to feel the pain when they go and seize the investments or the cash flows from the people who own them. We need politicians who will suffer from their own bad policies. And therefore, I have no problem with these politicians having shares or similar things. But back on the topic of Peter Dutton. At the moment, we don't have enough evidence to conclude that he did engage in insider trading. However, the timing of the declaration is not ideal. And he probably does need to have a robust defense against it. But let me know your thoughts about it in the comments below.